Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the charts behind me, which are 5 tickers that I will be going over, acting as a follow-up on this video. So if you haven't checked this one out, I recommend it. 13 stocks finding bottoms. And so in this video, I'm going to be going over 5 stocks that are respecting these levels that I identified in that video. And so the first one on the list is Chewy, ticker symbol CHWY. The level that I had identified was $20. And as you can see on January 11th, the close is $20.03. Yesterday, January 10th, we did get a close below it at 19.94, hitting a low on the day of $19.77. With an open at $19.80. So that's where I have this white line marked, just because we don't want to see opens or closes at or below that level. Hopefully they are moving up. And so what I see with this chart is, that since I made that video on the 13 stocks, it has more or less respected the level, especially with the close today being above $20. What I see with it is it does look like it is downtrending consolidation. So that is a good sign. However, with the RSI, I also see that there are lower lows there, so there's no bullish divergence. There's no divergence there at all. That doesn't really tell me that there's a strong signal that this could be going higher. It's tough to say whether this will be going higher or lower. One thing that does stand out is the volume does look like it has picked up the past couple days. So that makes me feel a little more confident this one could be going to the upside. Also, do want to note that yesterday on January 10th, there was this inverted hammer. So that is a bearish candle because sellers were selling it up here. However, today on the 11th, this tail of the candle coming down here does suggest that buyers were stepping in below $20 or really, below the close of the day. Yeah, $20.03. But it was a red candle day. The price did move in the downward direction during trading hours. So that is not really the best sign. But like I said, this is downtrending consolidation. So that is good. Volume is picking up. And it does look like if we take a step back, it is really, like at the base of this volume shelf here with $20 being at the bottom of that. So I do think it's really important that not only it can hold $20, but also opens and closes above 1980. So hopefully that happens. And it's continuing to maintain these levels. If it's not, though, I do see that $19 and or 1855 or 1850 could act as levels of support if it does break lower than 1980. And those are based on, the highs over here. And you can also see the volume shelf here picking up around those levels. So I do think those could hold because we don't really see that much volume traded below 1980 or really below 20. So that is something to be concerned with regarding this stock. But for this one, I would say I lean more towards this going to the upside. Not only is there a gap to the upside, but with volume picking up, that makes me think it could be going up. Anyways, moving on to the next ticker, which is Matterport, ticker symbol MTTR. This one is also showing downtrending consolidation. However, with the RSI, we do see that there are higher lows being formed. And so that is bullish divergence. Also on the day, January 11th, as well as January 10th, we do see these big tails coming down from the candles, suggesting that buyers are stepping in. And we did get a close at $2.35, which is the lowest close. We've had two closes at that level, going back to January 5th and then again today on January 11th. I did have the red line marked at $2.36. So it did break below that a little bit, but that really, is an approximate level. And so hopefully we don't see any closes below $2.35. And hopefully we definitely don't see any closes below 230, which is the lowest low in this downtrend, which was the low of today, January 11th. And so what I see with this, and also I should note, since I mentioned volume with Chewy, I don't really see volume picking up too much with the price. So that could be a bearish sign that, buyers are not really stepping in too heavily, picking up these shares at a discount. So that is something to be aware of. There is this gap to the upside, and just above that looks like there's this volume shelf. But then looking to the downside, what I see is if it can't hold $2.35 and it does break below $2.30, I could see it going down to approximately $2.25 or $2.19, where we see the volume profile start to pick up here, especially with this volume shelf here at $2.20. So that is something to be thinking about with Matterport. And I would have to say for this one, while I do see, a little bit of bullish divergence here, I do think that this is probably looking a little more precarious just because there isn't much volume stepping in. So there's not much volume, price could drop. And so I would say I'm probably leaning more towards the bearish side on this one. But, with all of these stocks, it's pretty tricky to say because a lot of them, they've come down and then they're consolidating. So I would think that it's bearish consolidation or a bear flag. But with this being downtrending, I would think that break to the upside. But, volume's really going to have to step in for that to happen. And then moving on to the next stock, this is SoFi Technologies, ticker symbol SOFI. This one, we have this pretty big gap to the downside here that needs to be filled, going up to a price of $9.50. With the closing price today, January 11th at $8.17. This one has respected the line that I drew at $8.14, with the lowest close being today's close of $8.17. This is also looking like it is right around this volume shelf here. It does have some more volume traded to the downside, so I could see if it does break below $8.14, $7.88 does seem like it could be a secondary level before there is this gap in trading to the downside that could result in price dropping to about $7.50. So that is something to be aware of. And one thing that I do see with the RSI on this one is while there are, slightly lower lows formed in the stock price, the RSI has remained more or less flat as far as the lows go. And so that is a weak bullish divergence. Does look like volume is increasing a tiny bit here, but not so much. So with this one, I feel like I'm going to be wrong on it. I feel like this is going to go to the upside, but based on what I see, it seems more like this is going to go to the downside. And I also do want to note that in previous videos, I have noted these lower gaps and this channel that price has been trading in before. So I do think that while it may not happen now or in the immediate future, I do see it coming down later on, likely in the year, to fill these gaps and return to this channel. Also, I do want to point out that it is kind of ugly, but this could be, a shoulder here, head, and then we might be getting a, kind of ugly small right shoulder over here. So I do think that this one looks bearish. However, this gap to the upside, I could be surprised on this one. SoFi is super strong, so it's tough to call. It's tough to be a bear with SoFi, let's just put it that way. But I do see a lot of things suggesting that it could be going down more. With the next ticker is Block, ticker symbol SQ, and this one I have to say, a lot of my analysis, I think, or my interest in this is going to be based on this video that I just shared from Verified Investing, which is Gareth Soloway's channel. One of his traders, Ben Poole, did analysis on not only Microsoft, but also Square, or I should say Block, ticker symbol SQ. And so I did post that video if you want to check it out. And so my analysis really just kind of follows up on his. I'm in the same boat as him. His argument's pretty convincing that this is forming a bear flag. And, I think that this one, if I'm to be bearish on one of these tickers, it's definitely Block. And the reason for that is not only do we see this sideways consolidation here, but we've also seen a more than 100% run up from the lows over here. And, that needs to be balanced out. It's definitely been overbought for a sustained amount of time, being up as high as with the RSI up as high as 86, 87. So I do think we're going to be seeing some corrections. And it does look like it is trading in this volume shelf area with this red line that I had drawn at $67. That was broken with the low being at $66.96 on January 5th. We do see, however, lower lows formed in the price, whereas with the RSI, we do see higher lows. But like I said, this has gone up more than 100%. I do think that it is likely to drop to the downside. However, there are a couple gaps to the upside, but I do think that those gaps will be left behind because if it does break lower, we do see volume shelf, let's see, right around $64.50 or so, $64.30 based on the consolidation over here. But that's kind of short-lived. And so I could see the stock price dropping to this purple line here at around $59 because we do see a lot more trading action happening below that. So I do think that could act as support, likely dipping down to maybe $58 where we do see all of this consolidation, or not really consolidation, but this price action consolidation over here. So I do see that as being a downside. Ben pointed out this gap here that would be going to a price of about $52. And so, I think it's going to be pretty interesting to see how the week closes. But I could see this definitely breaking to the downside with all of these gaps down there. And also, this volume shelf here that is right around $51.25. So yeah, I do think that there's a lot of downside with Block. So I think it's good to be cautious with this one. And then finally, the last ticker on the list is STEM, ticker symbol STEM. And so looking at this one, I do see lower lows in the price, but higher lows in the RSI. Volume stepping up with this one. So that does make me feel like, there are bullish signs with this. However, the consolidation here is trending to the upside, but that can fail. As you see here, I have this downtrending consolidation, which I would expect to break to the upside. That broke down. So now we're trending to the upside, but volume is stepping in. I think that that's really important. Buyers are picking this up. We do have a bullish hammer candle on the day closing at $3.55, which is well above the level that I had identified at $3.35. And the lowest close and or open in this case is at $3.44, which was on January 4th. And so with that, if it does break below $3.35, closing below that, definitely closing below $3.44, I could see this going down to $3.18, kind of serving as a secondary level because there has been, all of this consolidation there. But if it does hit $3.18, I would view that. I'm not great with stop losses and stuff like that, but I would view that as a stop loss level because there's not much volume traded below that. And there is this gap to the downside at $2.62. So with this one, I would have to say my bias is probably towards the upside, being bullish. But, with all of these, they could all be bear flags. It could all be bearish consolidation before it drops down. But, I could be wrong with them. I could be wrong with all of them. I could be wrong with a few of them. So it's tough to say. So you'll have to make your call. But if you found this video helpful, make sure you like it, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.